Weekly digest of the biggest market stories from the past week. Join host Anna Sarin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Good afternoon, everybody. It's James Black at the Canadian Securities Exchange, and today I'm joined by Jordan Youl from StoneCastle Investment Management. That's right, Anna Sarin and Bruce Campbell are not here. I hear Bruce is at a hockey tournament, and Anna's trying to go on vacation. So, Jordan, how are you? How's your week going? How are things in Kelowna?
Yeah, no, things are great. Yeah, it's good to be back.
Yeah, it's always good to talk to you and do this show with you. So we're going to recap what was, in some ways, a quiet week, but in other ways, a really interesting week. Obviously, Jay Powell spoke. We'll talk about what he actually said and the impact on the market and impact that there was. We're going to talk a little bit about sentiment, which we often do when you're on the show, and then just in general, what's happening in the market. So let's start there. Let's have a general discussion here. What's happening in the market? What exactly did you see this week that made you, look twice at your monitor or make you have to, draw out some speaking points for your clients there at StoneCastle?
Yeah, no, absolutely. And it goes back just beyond this week in particular. For several weeks now, we've been telegraphing that a lot of our models, our technical indicators that we follow, continue to turn positive. And it really goes back to the October lows when we're dealing with market in turmoil, hitting new lows at the time. But what's really interesting is back then, sentiment was extremely pessimistic. There was excessive cash on the sidelines, but fewer stocks were also making fewer lows, which was a bullish sign or bullish indication. So the markets have made a remarkable recovery off the October low. The Dow Jones, in fact, is up 20% off its October low. But this week in particular, I just wanted to highlight a few different ETFs that we track. And what's really standing out this week in particular is strength in commodities, the precious metals, the silver miners, the copper miners, the base metals in particular have been really the strongest performer this week. And across the board, we're seeing it across different industry groups, market caps, and even asset classes, including bonds and foreign equity markets, which is fantastic. And what's really been problematic for the equity markets and for investors in 2022 has been strength in the US dollar. And you can see in the chart on the left-hand side, we continue to see weakness in the US dollar, which is fantastic for equities, foreign equity markets, commodities, et cetera. So what's been a headwind for equity investors, like the US dollar and rising yields, are starting to compress a little bit, which is very constructive. And then on the right-hand side, we continue to see significant rotation internally within the equity markets. And for the last 18 months or 20 months, we've seen a tremendous amount of appetite into the value issuers within the indices. And on the right-hand side in the relative rotation graph, you can see the value constituents in the small caps, mid caps, and large caps are trending in a negative direction within the leading quadrant. They're starting to give up their leadership role. So the underlying momentum and rate of change within the value components of the indices is starting to wane. Whereas on the flip side, in that bottom left-hand corner in the lagging quadrant, we're starting to see that reacceleration back into the cyclicals, the small caps, mid caps, the materials sector, discretionary, industrials, and even technology. So we're starting to see the sentiment within the market starting to shift from more of a defensive, value-orientated market to more of a offensive, risk-on market environment.
Good segue. So risk on was our next topic, which you're relating that back to sentiment. Again, a movement out of defensive into, I guess, offensive industries, or how do you want to call that or characterize that, Jordan?
Yeah, so we're going from, defensive constituents, so, telcos, consumer staples, utilities towards the tail end of summer. We've seen appetite into those areas of the market. And for the last 18 months or 20 months or so, we've seen a lot of the leaders that drove the markets off the COVID lows in March of 2020 peak last year in Q1. They've been really out of favor for the last 18 months or 20 months. So, there's a lot of economic data out there. There's a lot of cross currents day to day. So what we like to do is we really like to take a look at investor sentiment and take a look at money flow, what people are actually doing with their capital and their money. And this is a chart of various sentiment indicators that we like to track, and this is a weight of the evidence. But in the upper panel, really what we're tracking here is money flow into the RIDEX asset classes. And you can see in the upper panel on the far right-hand side, the takeaway here is that there's a tremendous amount of cash on the sidelines. So when markets were bottoming in October, the percentages of cash in investors' accounts were at levels similar to what we experienced in Q1 of 2020 during the COVID lows. And you can see right now that percentage is declining, indicating that a lot of cash is getting put back into the equity market as markets are, testing these 200-day moving averages and inevitably trying to break out and hit new all-time highs. So I think that's what's really different between this rally off the market low versus summer rally, is that market breadth continues to broaden out and improve. So in other words, more issuers are trading above their 200-day, 50-day, and 20-day moving averages. We're starting to see more sectors participate, which wasn't really the case in the summer. And as I also mentioned at the top of the call, what was a problem in the summer, we still were dealing with, a parabolic US dollar and rising yields. And in this uptrend, effectively those two headwinds have rolled over and turned negative. And in fact, the US dollar off its February low of 2022, and that uptrend has actually broken that upward trend line. So all of this really bodes well for equity investors. Now with the midterm elections behind us, we're going into a strong seasonal period, trying to finish up year end on a high note as we go into 2023. So we're starting to see sentiment shift from, really pessimistic risk off to more of a risk on tone, which is very constructive, because as the markets continue to improve, we want the offensive sectors and the small to mid caps to be driving the markets as we challenge and attempt to hit new all-time highs. And that's what we're starting to see right now.
Right. So move all my money out of baked beans and into designer handbags is what you're saying.
Yeah, exactly.
Okay. I just gotta pull this chart for 1 second here, and we're gonna talk about Jay Powell. So Jay Powell, he speaks, the market reacts. I know we have a couple of charts here we need to investigate. But first, tell us what Jay Powell said this week on Wednesday at the Fed.
Yeah, well, it was a scheduled presentation on Wednesday, and the market reacted very positively to his comments. The market, or the Dow Jones, was up around 700 points. The Nasdaq was up around 4.4% on the day. We made a massive intraday reversal, and the market responded very positive to his comments. But it was expected in that, I guess, he confirmed the fact that the Fed is going to continue to increase rates, but not as aggressive. So in other words, if you go back, a month ago, the market was implying or anticipating that for this upcoming December 14th meeting, that the Fed was going to increase rates by 75 basis points. Well, today, there's a higher probability that they're only going to hike 50 basis points on December 14th. And it'll be really interesting because the CPI number is going to actually be posted the day before on the 13th. So the market's definitely going to be paying close attention to that. But as you can see, looking at the S&P 500, this is a chart, it's a multi-purpose chart. We've annotated when Jay Powell spoke on Wednesday, and you can see on the far right-hand side in the Zoom area where the arrow is, that long candle indicating extremely strong buying pressure accumulation. We closed high a day, which coincidentally ended month end as well. So we had a lot of rebalancing, a lot of short covering. So towards the end of the month, obviously the markets ended on a high note, which was fantastic. But you can see, we continue to be in this downtrend, however, right? And that's what's indicated in this declining red trend line. And really what's interesting is right now at this critical inflection point, the price of the S&P 500 is similar to that 200-day moving average, and we are touching that declining downtrend. So what we're seeing beneath the surface is positive, but for us to be really bullish and optimistic, we really need to break through that declining downtrend, and we're right on the cusp right there. So the market closed pretty much right on that declining downtrend, right on that 200-day moving average. But nevertheless, the market is anticipating, a 50 basis point hike for this upcoming meeting on the 14th in the US.
Right, and you have another chart here you wanted to share briefly, which was based on target rate probabilities.
Yeah.
Explain to us what this is all about.
Yeah, exactly. So this is what the market is expecting in real time for the upcoming FOMC meeting. And, this chart in particular is for the December 14th meeting. And you can see the market is expecting a 77% probability that the Fed is going to hike 50 basis points for the upcoming meeting. But what's really interesting is on the far right-hand side, 1 month ago, there was a 51.5% probability that they were only going to increase by 50 basis points, but a 42% chance that they were going to hike 75 basis points. So the takeaway here is over the last 4 weeks, the market is expecting and pricing in a 50 basis point hike as opposed to 75, which was a little bit more on the table about 4 weeks ago.
Understood. Well, one way or another, interest rates, they'll keep creeping up a little bit, but at least not at the velocity of earlier this year. The market will react, but as you're saying, long term, there's still some work to do to break through some of the resistance here in the market. Okay, so oftentimes every week, it's a trend. We talk about CSE issuer news. Now this week, I don't really have any news. I just want to plug a couple things. More importantly, things that we put on our own channel here. When you're not watching Market Recap, we have a podcast, and I just want to share with you that we did one with Jones Soda this week that I really enjoyed with these gentlemen. Jones Soda, as you might know, is a craft soda developer, I guess, from the West Coast. They're all over the place now. I might know them because of their sour green or cherry flavors, the blue bottles as well. Stuff is delicious. There's more to it than just that. So I implore you, go to CSE podcast anywhere you listen to your podcast, or on this channel right here, or CSE TV on YouTube. Really enjoyed this conversation with the gentleman running that company. And if you prefer to read, now this is not the best description of this issue. You got to go to blog.thecse.com, and we do publish a quarterly magazine called the CSE magazine. It used to be called the CSE Quarterly, now it's the CSE magazine. And this past issue, we covered a wide array of companies in the cannabis sector, and I read this issue top to bottom. I am the editor-in-chief, all to be said, but this particular issue, if you want just a bird's eye view of the entire cannabis industry in its current state, especially from the U.S. perspective, this is a good read. So again, employeeblog.thecse.com. You can find everything that I just mentioned there. All right, commercial aside, what should we look forward to for next week?
Yeah, so there's a few things. We have the Bank of Canada interest rate decision on Wednesday. The market's expecting 75 basis points, so we'll pay attention to that. At the market level, effectively, everything I've just mentioned, we're seeing a lot of positive indications. So effectively, we just want to see some positive follow through and get some more confirmation and breakout as we head into year end. And then we're going to pay attention to, the OPEC meeting, which is going to take place on Sunday. So we're going to watch oil and see what the aftermath is as a result of those discussions over the weekend.
Good stuff, Jordan. And if I might make one last plug, this mustache here wasn't in vain. We did raise money at the CSE this year, Movember.ca. You can find us at CSE-Canadian Securities Exchange. We're there. You can see my picture and others who have grown mustaches at the CSE. We do appreciate any contributions. There's, phones are still open, so to speak. So please come and join us there. And Jordan, once again, thanks for coming aboard for the weekly market recap. I think Anna and Bruce will be back next week. I don't think they have Christmas vacation quite yet. So thanks again, everyone, for watching. We'll see you on the next one. Take care.